Lynda. How you doing today?
I'm just fine. How about you?
I'm lovely. My hair looks like this because you gave me a brain twister.
I picked a
So
good one.
simplest way to say it. I was like, "Ah!" But it's okay. So
Are you a mind reader?
out of respect to anybody and everybody watching this video, we're going to try to go through some of this as quickly as possible, but it's a phenomenal question because it touches on so many different aspects of proper accounting and especially how to use QuickBooks Online projects in a proper manner. Um, I think you'd agree with me. One of the biggest benefits yet challenges of QuickBooks Online is that there are often three different ways or more to get the same thing done, right?
Right. And then the question is, which one's the right one?
Yeah. So with that preface in mind, please understand some of our colleagues, there are probably other ways that this could be done, and we openly invite everybody to contribute toward this as well. So with that being said, do you mind reading off kind of the full question itself, and then we'll dissect it quickly and then jump in?
Okay, sounds good. So from Firefly 91, products and services expense account. My company hires others to do portions of projects. We give them purchase orders based upon the products and services we have. I am setting up my products and services in QBO. Now, should the services we purchase be assigned to an expense account or liabilities account? We pay the purchase orders a little at a time as the project progresses. I believe this makes this a liability because it's something we will pay. But once it's paid, it's an expense. Do I assign it directly to an expense account or to a liabilities account?
Okay. So when Lynda and I first started to work on this question, we were trying to dissect the different sentences that were put into here, because when you would see something like we give them purchase orders based upon the product and services we have, it becomes a little bit confusing. You would think that traditionally, I mean, you're going to give a purchase order to a company for something you're buying, right? Or a service you're grabbing. So we translate this over to the idea of maybe like a billable expense is the concept. So where we went with this, we need to step back a little bit further first, and let's talk about products and services. We need to talk about the fact that there are what's known as dual-sided items, right? With dual-sided items, I've gone in, and this is our fake company file. We created a bathroom remodel item. Bathroom remodel service, not an item. It's non-inventory, it's a service.
Two-sided.
Right? Categories, just to make it a little easier at the moment, your sales information, remodel bathroom labor only, your purchase information. On purpose, we can type something into here that says, purchase facing information, but I'll show you through some examples in a moment how the distinction, or where the distinction comes into play. Where we're going with this is, if you look at the journey within the accounting of QuickBooks Online, if you start off with an estimate can branch off and become a purchase order, which becomes a bill, and then a bill payment to be your money out. But an estimate can also become an invoice to a customer received payment, which is your money in aspect of the accounting, right? So with that in mind, that's where the idea of using projects really becomes a powerful thing, because you need to take all that information and you want to be able to keep it contained to see the benefits of it, to see the profitability of a job.
Right.
I don't know about you, Lynda, but we always tell our clients, especially construction or service-based, job costing is it's a beautiful thing about accounting. It really will help you grow your business, but you need to grow into it, right?
And then we go, notify.
Yeah, absolutely. Notify is amazing. Taryn, you're the man. Um, when it comes to job costing, it's traditionally 4 times the amount of work for the business owner, not the accountant or the bookkeeper, but for the business owner, because you're the person that's out there that has to tag everything to this specific job. There's no
Yes.
way we could possibly know. So if it's not done before that, it's a lot of phone calls and a lot of time spent with us, which can get more expensive for you. So please
Mhm.
keep that in mind. Okay. Um, so I'm going to go back into QuickBooks Online here, and we'll just go back to the dashboard because I want to kind of explain again where projects is at. There's a couple things we need to do to our company file to set this up appropriately on the QuickBooks Online Pro version so you can do everything we want to do. So gear icon, accountant settings, we're going to go into our sales area, and we're going to turn a couple of details on. One of them being progress invoicing.
Right.
We're making the assumption from what was said that since the vendor or the subcontractors we're going to show you in a sense is billing out to us as progress payments, we're probably going to be doing the same thing to our customer. So it's an
Right.
assumption. We, of course, want to make sure that we've got our products and services turned on. We don't really care about the tracking the quantity and the price on this specific type of situation because we're talking about non-inventory and service-based items. So those two would be great. Anything I'm forgetting here that you can think of?
No, I don't think so. Do you have to put billable on, or is it on by default? And this
Purchase
is
orders,
the
we've got
plus
purchase
version.
orders turned on,
Okay, so you got that on.
which will
And
be
billable,
important.
and you got billable on.
Exactly. So a couple of those details, make sure they're all turned on. And we're going to go in, we're going to create our customer. And in this situation, our customer is Artisani Restaurant. I heard they're not very good cooks.
They burn everything.
Gotta have fun, okay?
Just
So
when the fire alarm goes off, then you know it's cooked.
exactly. And it's not chili. So what we're going to do is let's assume that we're going off of this and we're actually creating the estimate to give to the customer to get the approval to move forward with this, right?
Mm-hmm.
I'll choose my first estimate, and estimate is under a project.
Right.
I apologize. I'm going to go back a step here. We're going to go back to make sure people understand this completely. Under customers, if I choose, there's a couple ways to do this, but if I choose Artisani Restaurant, I can go to projects here,
Mm-hmm.
and I would see the project listed, and then I could create that project, or I could go to projects on the side tab here.
Mm-hmm.
I get 3 ways to do everything.
Same thing, right?
The reason that's important, customer goes in first, then the project name goes in, so you can start to attribute all of these different things to the actual project. Fundamentally, super, super, super important thing to hear me on. I can't stress it enough. When you create a customer, Artisani Restaurant, do not create the project by starting the project name as Artisani Restaurant.
Yeah.
Do something completely different. Do an address, do whatever. And the benefit of that is because of autocomplete.
Mm-hmm.
Start to type it in. If you start typing in Artisani Restaurant, and if that's the beginning of the customer name and the project, your employees or you are more likely to tag it to the wrong thing.
Yep.
Okay? So it's super, super important. Will save you a whole lot of headache.
Mm-hmm.
So we've got our project. The beauty of projects is as you're creating these transactions, you're doing these things, you literally get this screen here. We're going to go to transactions because I've already created 2 different estimates because I wanted to explain 2 different parts of this. When you create an item and you have the sales facing information and you have the purchase facing information, 2-sided items, we'll put a link in the video that will also take you to a special blog we wrote about bundles and such that explain a little bit more. You'll see your sales facing description will always show up here. Okay. When you turn that into a purchase order, so if you create the estimate, all the details, you have this drop down arrow, you can choose to either create an invoice or copy to a purchase order. By copying to a purchase order, it's going to give you, if your items have been tagged to have a purchasing site as well, they will populate onto a purchase order. What I mean by that is if you created items that were on here and they did not show up as being something that you purchased from somebody else, they will not auto-populate onto a purchase order. They will not be there. You'll have to add them on, so forth. So the key is to add that on there, click OK, and now when this pulls up,
Purchase side, yep.
See the description? On purpose, purchase facing description. This is a fundamentally different setup than QuickBooks Desktop. QuickBooks Desktop would actually transfer the same thing from the sales side over to the purchase side. And we have an interior designer company that really actually wishes it would do the other way, because if it's all custom order items,
Yep.
you want that sales description that you manually typed in to be pulled over. So please recognize the difference between the two. That also means that
I wonder why they did that.
right, Lynda? What was that?
I said, wonder why they did that. Just to be different?
No, I mean, I could see reasons for both sides, because traditionally, if you're buying something, you're probably changing the part number, you're changing the description, you're making it your own. Interior design is a very unique industry where every job is, everything's new. You're literally ordering just for that specific client. So it's a, I call it an advanced workflow. So hopefully the distinction between the two does make a bit of a difference, but you'll see that by doing this, we actually got this information pulled over. So keep that in mind. We're going to exit out of that. We really don't care about this part. And let's go back to our initial estimate. And what we did is they wanted to remodel the customer bathroom. So we created an estimate for $1,000 to remodel the bathroom, which, yeah, it's cheap, but hey, it's a buddy. Descriptions here, you know, service description, so forth, 1,000. We came in and we copied it to a purchase order. When I copy it to a purchase order, whatever the amount is that you put at the bottom of that item is what's going to populate here. So you only put values in to the purchase item or the purchase area if they stay constant.
Yep.
They're going to vary, put it to 0.
And change it.
That way you know you have to change it. And you're more likely, because if there's a dollar amount, there's a better chance you'll make the mistake you won't change it. So put it to 0 in the item level. So in this situation, what we would do is we would choose our vendor. We'll go to DH3 surfacing here. And we're going to make sure we've got our quantity. You could put your rate if you need to do that, or the amount. I'm just going to do this one at 500 because we'll just say it's all bundled together. But now we've got our customer in our project, and this is super important. Now, in the right field, we'll go customer.
Yep. You want to put the bathroom in.
Choose the correct project. So remember when I was talking about that, if you start it off with the exact same name, you would have had it twice here, and it could have caused confusion. So we'll choose the right one. Okay. We're on purchase order. We'll hit save. Now that this has been saved, we're going to pretend a week goes by, whatever, 30 minutes, you get the approval. It's great. It's wonderful. And we know we can now create a bill out of this. If we click copy to bill, it will give us the ability to choose how much of this we actually want.
Right.
Because I want to try to demonstrate how you can break up purchase orders into partial orders, I'm going to do something different. We're going to change this to 10 and this to 50, okay, to give us the same 500 we had. So hopefully everybody followed that part. I'm going to save that purchase order still. Now when I go to copy to bill, see the received here is 0. Let's go to copy to bill, And let's say when we've got this pulled over, maybe we only received 20% of this, right? 2 of them.
Mm-hmm.
We can set this up, make sure your data is good, everything's great, and we can save this thing.
Right.
So now, could have saved and closed. We're going to go out. We're going to go back to that project. We're already in the project here. We can see we've got this bill here, okay, that's connected to it. If we go back to our initial purchase order again, look what happens. Received is 2 of the 10. So it's a way you receive a partial purchase order. The question was specifically talking about how to use purchase orders and if you're only paying for part of it along the way. So this really kind of shows how you could use a purchase order for, it's not exact, it's not accurate, but for AIA billing, where you're doing, again, it's the opposite side of progress invoicing. So if somebody else is progress invoicing you, you could do it this way, right?
Yeah. Yep.
So we've got those details, but more importantly, we now have a bill here, okay? So if we came in, and I love this about my projects, right? We've got all of our projects. We're gonna go here. Let's go to project profitability. Accrual basis, since we haven't paid it yet, we've got that $100 already showing up.
Mm-hmm.
Cash basis, nothing's there because we haven't actually paid it yet.
Mm-hmm.
Sound good?
So I think that's where they're thinking when they were thinking liability. Is
Yes.
this accounts payable? Okay.
Yeah. Which is a great point of why to kind of like really highlight this for a moment. So cash basis versus accrual basis in this type of a scenario, even if you agree to a contractor, hey contractor, I'm going to pay you $500 to do this job, you do not recognize any of the expense until you actually make a payment under cash basis. Under accrual basis, if you had a contract and were setting it up and you received the bill based on the contract, you could then create the bill at the point you receive the contract so you can make payments against it.
Which sounds like the way he was receiving bills in that question, even though he didn't quite put it that way.
Exactly. What we're trying to do here is take every possible aspect of how we read this question and provide both sides of it throughout this. So
just for clarity.
This is super informative, even though it's a longer video. But so again, we'll go back to project now. Now let's go, and I'm clicking on my transactions because I love that everything's all kind of held in this area for me. Let's go back to that estimate. And now
you can invoice.
Let's bill our customer, right? And get some deposit money for all of this. So we're not just throwing money out the window. I mean, it's cash flow. Cash flow is important.
Yeah.
So we've got the customer, we've got those details. We're going to just simply click create an invoice. And I want to remind you, we have progress billing turned on. Because progress billing is turned on, a newer feature of QuickBooks Online, we now have the ability to choose what we want to do here.
Right.
So,
and most contractors want a deposit up front because they're going to have that upfront cost. So yeah.
Yeah. Now there are different requirements and regulations per state. So we do recommend that you check what's appropriate for your specific area. And we cannot say the way we're going to talk about this next part is exactly right for your specific needs.
Right.
Legal disclaimer, don't sue us. Thank you. Right.
Matthew said.
So let's say, I mean, we're paying out the 20, but let's put it at 30% of each of the line items. So you can actually choose different line items too, which is really neat. Does the math, and let's just create it for $300. So now we've got this invoice here, right? And put to the person, we've got everything set up so it's automatically going to the right thing, and we can click save. Of course, we're assuming the dates are correct. We would, of course, have credit cards turned off. There's no reason to pay merchant processing if you don't need to. Make them do ACH unless they ask. Put the email in, email it over to them. There's a lot of other cool videos about that stuff. Let's have fun. Let's go back to our project profitability.
We're still looking good in accrual.
Yeah, baby. 300 minus 100, decent profit margin, right? Cash basis. Wah, wah, wah.
We got nothing. We didn't pay our bill. We didn't get paid. Zero.
But I sent him a bill. Didn't I
Where
make
did my
the
money go?
So there's benefits both ways, but keep this in mind. Cash versus accrual, that's where that difference is at, okay? So now we're going to go back again to projects, kind of catch what we're doing here, right? And we'll go back to our transactions. And if we go back to our invoice, take a look at this down here. This is newer for people. If you haven't done this progress billing, it's showing you the details of it, which is really, really cool.
Yeah,
Like,
it's nice.
as an accountant, I geek out on that.
That's new. And that's new. That wasn't there when projects first came out. Like everything else, when it first comes out, they start to layer it and get it better and better.
The other aspect of this, we call this the shelf, okay?
Yeah.
Now, I started off by showing that other estimate I had created just for the purpose of demonstrating sales facing everything else. So because of that, that's sitting in our shelf. If that, let's pretend that was gone, if there are other billable expenses for a project, they would show up inside here as well. So the rule of thumb is to keep your shelf cleared off. I'm going to come in, now that I'm done with that one because I want a clean shelf, I'm going to say I lost this bid. I'm going to reject it, actually.
Okay. Yeah. It's gone.
And we'll put in our thing here, today's date. This has nothing to do with your accounting whatsoever.
Nope. Non-posted estimate. So, but it's good to clean it up and keep it contained and keep it small, right? I mean,
yeah. And think about a year later, check out what your closing ratio is.
Yep.
How'd you do?
How many times have you worked with a client and they just have like a mess?
Asked for estimate, and they never did anything.
Yeah.
Look at my shelf.
Yep.
It's beautiful. So again, a little bit of a side tangent, but there's a purpose to it, okay? So this gives us the ability now, we have our estimate, we've got our purchase order, we've got those details in here. Let's go ahead with this bill and let's make a payment on it now. Sound good?
Mm-hmm.
So we've got our, we only charged so far the $100.
Mm-hmm.
We've got our little button under here now that says make a payment. We also have this beautiful one linked transaction right over here, right?
Mm-hmm.
So we know that it's connected to something.
Yep.
Let's go make a payment. Same person. We'll choose the right account. I like the Bank of QB community. Find us on Facebook. Thank you. It's actually QB Community Live. Total amount. We're going to go, actually we're good there. Save and close. Bing. To demonstrate again, project profits or reports, profitability. Let's go back to cash basis. Got our $100 we spent, right? Accrual basis, didn't double it, didn't do any of that stuff. It's just recognizing that the money was actually spent at that point. Anything to add so far?
Nope, we still haven't been paid, so we need the customer to pay us.
Good point.
We don't want to have negative cash flow.
Give me my money.
Yep.
So now we sent out the invoice. We did this beautiful custom invoice as you can do in QuickBooks Online. You sent it out. They're so amazed. They loved it. They decided to pay you all $300 right away. So now we need to recognize or receive the payment. And of course, that's assuming you're not using Intuit's merchant processing, that because once they had actually made the payment, it would actually recognize it for you.
That makes it nice. Yeah.
We'll say they did a check. Okay. We'll say the reference number is 1122. And we would go to undeposited funds because we do everything to undeposited funds. Because if you're like us, you probably just took that check, stuck it in your side drawer, and you're waiting to take it to the bank. So we'll go save and close for the 300. And project reports again, yeah?
Mm-hmm. I
Project
like all the
reports.
sound effects, by the way.
Ding! And here's my cha-ching. Here's the,
Yay.
so now, accrual basis, cash basis look exactly the same.
Yep.
It's because
We're golden.
now we've actually received the money. So we wanted to show the differences between those. So by using the project, using projects, you can break it down per project to start to see the profitability.
Mm-hmm.
Let's mess this up a little bit. And let's say this job had some weird stuff because we quoted it and we ended up having to do some electrical during this we didn't expect, right?
Mm-hmm.
So why don't we actually go in and let's create a single time activity for whoever we have in here for 7-Eleven.
Yes, 7-Eleven.
For affordable electricians, okay? Good
Mm-hmm.
people. We're going to choose our project again, customer bathroom, and we're going to go to our services that we probably have. Hey, look at that.
Oh.
Electrical in here. It's going to be, because this was extra work that was unexpected, we should create a change order, something to notify the client that they're going to be billed more, because if you don't do that, you might as well plan on eating that.
Yeah, how should you won't probably get paid. Always upfront.
So, but we're just going to put this time activity in, and we're going to say that they're charging us the good guy rate at $50. Okay. If you're using divisions or businesses or classes, you can use that stuff. I'm going to bypass it for now. You could also really be specific and do start and end time, but really all we're looking for is how many hours it was. So we're going to go 1.5. We're going to go 2 hours. I did 2 hours so we could see that it's going to do the math for you, and you're going to get the $100 charge. We do want it to be billable. We've got it to the, again, date. And we're going to go save and close. So what happens from that? We've just created an expense that we're going to have to pay, but we wanted to attribute it to a project correctly also. Let's go back to our project reports and go back to profitability. Under accrual basis, we should have, we have a billable expense, but we haven't actually billed it to anything.
We haven't, right. I was just saying it's not in there yet, so we got to show it.
Yep. So what if I go to my unbilled time and expenses?
There you go.
Got $100 there. Pretty cool, right? So what we always do with this is we'll come into our transactions and we'll see our billable expense, right? Where is it at here? Time charge.
Yep, time charge. Yep, the bottom one.
So we should create an invoice to the customer for this. Click on that. If we have it marked in our system to make billable expenses that you can mark them up, I should say, you do that also. So at the moment that's not set up, we'll go in and we'll turn on in a second here. We've got customer in, dating, everything's great. We've got our services we chose, right? We've got our 2 times 50 for 100. And this is based off the assumption we're going to just give it to them exactly for the price we got it. We would never make any money that way, so we're not going to do that. I'm going to leave without saving. I'm going to come back into my settings, and I'm going to go back to expenses. Boom. And we should be able to
markup, right?
Default amount. People may disagree with this. The very minimum I've ever found you should ever do a markup to be break even, 35%.
Yeah, I was going to go for 50.
Break even.
I know.
That's when you lose money because of your own time, 35%.
Yeah.
Perfect world, 100%.
Yeah.
But we'll hit save. Okay. So now we know for sure that's going to go in there. let's see here.
You go back to your project and now build that, right?
Make sure we had everything triggered off. Click done to save it, right?
Mm-hmm.
So we'll go back to our time charge. So there's time charge and billable expense. The time charge is a little bit different. That gets marked onto there. Let's go create an invoice. This one won't actually have that markup aspect to it, but I'll do a billable expense, which is what I meant to show in just a second here as well. So let's take this time charge. We're going to throw it on. We can actually take, and we could change this to 75.
Mm-hmm.
It's still linked. And we'd go save and send, save and close, whatever you'd like to do.
Mm-hmm.
Boom. If I had a billable expense, maybe that electrician or somebody had to go buy some items, let's look at that. So we can actually do an expense or we could do a bill, right? We'll go, I'm sorry, I did that wrong. They both work. Let's say we've got Ace Hardware, nice. And we'll go materials. Should probably be a little bit more detailed, but it works.
Which happens on jobs like this. I mean, you see it when they work on a job that they go into the wall and all of a sudden it's like not what expected. Then you see, oh my God, look at that. And then you have to call and have somebody come out and then it does change the job and it will be reflected in the pricing.
So plumbing, if anybody's ever done plumbing, you're going to have to get fittings or this or that or whatever. So person spent $25. We're going to mark it as billable. Our default we had was that 50%, and it's taxable. Okay. Got to put our customer in, right? So not using the same name makes it so much easier. Good to go there. Got our dates, save and close this bad boy. Wah, wah, wah. The account you choose for a billable expense does not have an income account associated with it. Before you save this transaction, you need to make that association or the income won't be reported correctly.
You got to go back to your item.
Yep. So we're going to cheat. We're going to come up here. We're going to go duplicate. And
it was materials.
Close out of this. Products and services. I know that's all the way down at the bottom here. We'll go edit. And expense account, materials, boom.
You get the right materials?
Actually going to be, we'll still put this right here. Ace Hardware. Didn't have to do that, but we did. I think it's actually in here. When we set up the markup, did we set up on the income side
Probably
what
didn't.
Markup account is actually used?
There you go. Right? Oh, markup. Interesting.
Okay, so to make this even easier, we're going to go back, check it again.
Just type in materials in the find box to see if there's more than one, because you have a big list here on the sample file. So there's two. I didn't think it said materials new, but it's got the expense account. It's got the income account. Strange.
Okay. We'll go to electrical wiring, I guess. See if maybe that one is a service item. So I'm going to go back to my projects, choose my project. Again, everything's nice and contained, which is great. Build time and expenses.
Transactions. Time charge, right? Was it the time charge? No, it was the billable. It was the billable one. The bill.
So it didn't save it is what happened.
Gotcha.
So we'll go straight to expense instead of the billable expense. We'll just go Ace Hardware. Oh, I think no, I didn't.
Item, yeah.
The last time I believe I chose account as materials.
That's
I
what it
didn't choose
is.
item.
Yep,
So
you have to use
sorry for
item.
confusion.
And I
Difference.
forget about that too, because when you were on the bill, because it's closed off, the arrow's closed off, you just forget, and then you don't realize that this arrow was closed. So, and sometimes in QuickBooks Online and in QuickBooks Desktop, the error messages are not always that clear.
So see how I did the 25.
Mm-hmm.
Click billable, automatically gave the markup, sales amount, tax, customer.
Project. Yep. Beautiful.
So billable expense now.
Mm-hmm.
Okay. So with the billable expense, come into here. Let's go back to projects first, project profitability. Materials are here and the subcontract from before, right?
Mm-hmm.
Go back here, transactions. Let's create an invoice to the customer for the parts itself. Okay. We
Mm-hmm.
could have, if we didn't do the time material before, we could have actually pulled it off the shelf and pulled it over.
Mm-hmm.
But you'll see it creates these two different items on here, the piece itself plus the markup. This is not seen to the customer, but it's all under one item. Okay. And then we're going to go save and close on this thing because we're creating an invoice. Go back here to reports, project profitability, markup, sales, services from before. Everything's all nice and clean.
Yep.
Now, if we've set it up this way, haven't received, we should probably come over to our reports, right? And we'll try to do it for just that one day. So the balance sheet was not set up specific to this example. We'll go 11/18.
Oh. 11/18.
And our value cash pro basis. Accounts receivable.
We better get collecting some funds.
Yeah. Somebody owes us money.
Yeah.
We can see what we were actually trying to demonstrate was the accounts receivable actually does reflect appropriately. We did everything all in one day. We took the $300 deposit. This is actually our difference. That $37.50 is our 25 plus the markup. And then this was the additional markup for the time charge, 75 times 2.
Right.
So AR is impacted correctly here at this time also. So I believe that's a pretty thorough kind of run through.
Yeah, it's pretty in-depth. I mean, you gave a lot of different scenarios for a lot of different pieces of that question. I think it's good. It shows all the different aspects of projects, really. I mean, and projects are great. If you've got a business that's going to work for, it's a good, you get a lot of detail in there.
We do a lot with projects at Parkway Business Solutions. We have a software development house that has its own time tracking software. So they build these different projects for everybody. They have billable hours for each of their different developers, which we create into our system as vendors. And then we do some pretty unique stuff where we create items for each of the different people, because pulling time in, as we showed you, doesn't give you the same like clarity as a billable expense would. Right. We didn't, because you'd have non-billable time versus billable time. You don't have the ability for non-billable expenses the same way to show up line item wise. It'll still show up on a profit and loss. So the way we set it up is we can actually create individual items for each of the developers, pull them in, create bills for their time, which get turned into invoices. So when the customer pays, we know we can pay the developer as well in some pretty unique items.
Yeah, and I've seen some companies use projects in very unique ways. It doesn't have to be a contractor. There's a lot of companies that have worked around and used projects for
Yeah.
their business that you would say, that's pretty cool. That's a good way to do it, you know?
Not to mention, we're making this video right now, as you guys saw, middle of November 2018. They are currently in testing to bring in more of the time relationship to job costing capabilities.
Mm-hmm.
And that's going to be fundamentally huge. So if you're running your payroll through QuickBooks Online and you need to be able to pull those hours and break them out, like using T-sheets with this setup, it will be very, very powerful, much more accurate job costing, much closer than it was 2 years ago, and still doesn't quite rival desktop, but pretty darn close.
Yeah, and T-sheets is great. I mean, it you know, because the other thing you got to think about too when you start to do time tracking with your own employees is you get to start to add in that piece of what does it cost to have the employee. It's not just the hourly rate. There's more to it. Obviously, is matching taxes and whatever other benefits, workers' comp. All that has to be factored in if you really want to get in detail with your job costing.
And the super fast, simple version of that is if you have your profit and loss structured appropriately, you can take all of your other overhead expenses take them for a given period of time that you know is a good representation of how your business normally runs, and take all of the expenses, divide it by the total number of hours of everybody worked. Okay. So it's a blended rate that way. And that will end up giving you an average per hour of overtime to attribute to jobs.
Yep.
It is not the most accurate, but it's one of the simplest ways to try to contribute, you know, your overhead into the process, because as we started this off by saying, job costing is extremely important and extremely powerful, but it's something you need to grow into.
Yeah, for sure.
So
it's complex.
I hope that this longer video, this is definitely longer than we traditionally make a video for an answer. I hope it was packed full of good information. We'll do some write-ups on this as well to kind of tag with it also. But we hope this really kind of triggered each of the different potential
scenarios, really.
Scenarios, yeah. And if not, reach out to us, Lynda with Arsani Bookkeeping, me with Parkway Business Solutions.
And VendorSync.
And we're happy to help any way we can. If you're using desktop,
the other way. Mirror.
Dang, green screen. But other than that, we wish you a very, very successful week. Thank you so much.
Bye now.